Welcome. It's time now for our regular look at the markets with a guest here on IGTV, Bryan Noble from tradernoble.com. Bryan, welcome. Happy New Year to you.
And to you.
What a way to start off the year. It's been incredible. We've had so much fundamental data that's twisted the markets. We've got gold at near, 7-year highs, a punch up in Brent and WTI. We've got the equity markets coming off the boil. Gold, one of your trades, is doing really well. What's in the back of your mind when looking at these markets at the moment?
Yeah, it's been incredible two-way volatility, thanks to Mr. Trump again. He just can't let things go. Something has to happen all the time. And if we go back to last Thursday, when markets closed at record highs, the extreme fear and greed, or the fear and greed index had extreme greed of 97. I've never seen a reading like this, with the S&P up 30% for the past 12 months. If we go back to Boxing Day last year, we had a fear reading of 4, and the S&P rallied 30%. Are we going to sell off on the back of this? I think so. I think this is similar to 2017-18, when the markets just went up and up and up. Finally hit a brick wall near the end of January, and we had a 15% fall. So I'm looking for something similar. Whether it started now with the sell-off from the Iran bomb on Friday, I don't know. We've left a lot of gaps in the market, which the US traders hate to do. So we closed a fair amount of that gap on Friday when the S&P got up to 45.
Let's bring up a chart on this, the S&P 500. This is the December low you're talking about last year, 30% gain that we'd had. And we look at this little bit of retracement on a day-to-day, on an hour-by-hour chart. This is quite a steep fall, but looking at it in the context of this 30% rise, it really is a tiny retracement. Are you expecting a decent pullback before further gains?
Well, first of all, if we go back to New Year's Eve, the low in the afternoon was 32.12 in the S&P. We've tested it on Friday morning. We tested it again this morning. We've bounced off it. So far, we still have a gap back to 35 on the S&P from Friday's close. We have a gap back to 32.58 from Thursday's close. So we have a lot of gaps still to be filled in the market. And US traders hate to see the market sell off without them able to get on board. Against that, we're so far away from the 50-day moving average. We've a long way to. We're probably 100 points above these averages, which is huge. So, personally, I'm still a buyer on dips until we break kind of 31.95. If we close below there, then I will start to get bearish. Then we should start looking at going run down to the 50-day moving average. But if we go back to 9/11, when the Dow fell 14%, 4 weeks later we were about 14% had been regained. So just because we have the threat of war doesn't mean that the stock market is going to free fall. And there's a lot of technical damage. We have to fall a long way to do a lot of technical damage to what's happened, even from the rise when I was here 3 weeks ago, when the S&P was down at 30.70. We rallied nearly 200 points into the year end.
Yeah, it was a stunning end to the year. Just a quick update as well on the Dow, if we can. Similar sort of price action, obviously. Similarly, obviously, you're looking presumably to get, a lower price?
Yeah, I mean, I'm both ways in the Dow, similar to the S&P. I'd be a seller of the Dow up near 29,000. I think we've hit every target that we've had over the last 18 months has just been obliterated on the top side. Against that, on the bottom side, we really need to take out sort of 28,200, 28,200 before we can start saying there's a sort of a bear market in place. Other than that, today I'll be a buyer around the 350 to 400 area in the Dow. That's 28,000 big figure, and I'll be a seller sort of from 28.9 to 29.050. The good thing about with the two-way price action now, as a result of Friday, traders can come back on board. Before it was just one-way traffic, so at least we're seeing a bit of two-way flow in all asset classes, which we haven't seen for quite a while.
Yeah, okay. Moving on to what's happening on the foreign exchange markets. We've spoken before about the performance of the dollar. It's interesting actually looking at the dollar at the back end of last week. We saw a little bit of lost ground for the dollar following on from the strikes. In fact, we bring up the euro-dollar chart. We've got these higher lows that we've had in place since this swing on the 29th of November, which was the low point for euro-dollar, all the way down at 109.80. And here we are now at 111.98.
Yeah, I mean, my theme for this year is I think the dollar is going to weaken. I think the only thing that Trump has not got since he went into power was getting a weak dollar. He's talked about it a lot over the last few months. He's berated the Fed for not cutting rates enough. I think the dollar, we see the yield differential between treasuries and Europe has narrowed substantially over the last sort of 8 weeks into the back end of the year. So I think the dollar will weaken. I was long the dollar. I got out this morning at 111.85. I look to buy it back again again at anywhere between 111.10, 111.50. I think as long as we hold 110.50, I think this euro is going to go back up to 114 again.
Yeah, it's interesting actually. We're keeping up the chart just for a minute because I want to draw on here what's happening in terms of the head and shoulders, inverted head and shoulders pattern. I'm going to ask you whether or not you are a fan of this in just a minute. But broadly speaking, we've got these highs here. It depends on where you take your head and shoulders pattern, of course. But if you take a head and shoulders and inverted and you go up, assuming we get a higher print on this and assuming we get an inverted head and shoulders, what we do is we take the depth of the inverted head and project it up from the break. If we get anything like anything which can give us sort of price action which would take us up to this area up here, I'm going to ask you the question, if you get a break of this, are you happy at euro dollar at around 115 level? Is that sort of price action you'd be looking at in terms of the weakness of the dollar against the euro?
Well, certainly my next immediate target, if we can break 112.50, is the 114 high from back in July. I think if we can break through there, then there's no reason why we can't get up to 115, 116. Personally, I think this euro is going to surprise people on the upside. We've done nothing for the last couple of years. It's been traded in such a narrow range. It's time for volatility to come back in the FX. And it's interesting, despite all the war talk, the dollar is actually weaker. So I think that's quite significant. And even, you know, when we had the bombs on Friday morning, the euro could only get down to a low 11.25. So it's only one big figure fall. In past times, that would have been a lot more. So I think you got to respect the price action. You've seen cable today has jumped 100 points on the back of the PMI data as well. So I've been bullish at cable. I think sterling, as long as we hold 129, will continue to be a buy in dips, and we should go back and test the post-election high of 135.5.
Yeah, that's that high point there. Okay, you're happy about testing that then? That's interesting. Let me just quickly run you through some of the trades we talk about. Spot gold. Before we went to air on this, you said we're broken out of the top of the Bollinger Band. The significance of this?
Yeah, gold. When I was here 3 weeks ago, we were mentioning that the past 4 Decembers, both gold and silver had bottomed. Same happened 9th December, gold got down to 14.50, and here we are 15.88 overnight. Now we're way outside the Bollinger Band. I certainly wouldn't be buying gold here. I would be a seller between 15.88 to 1600 with a tight 16.08 stop, looking for a $20 retracement. But overall, I think gold is still a buy on dips. The price action has been nothing short of phenomenal. Same in silver. Silver hit a low of 16.50 on the 9th of December. We got up to a high of almost 18.50 overnight. So we've had a $2 rally again. So you know, every December it seems to be that both gold and silver bottom. Now you need to have you have to have a small position so you can stay with the stops in case the market did have a shakeout on that 9th when silver fell 5%, and it was just a one-day wonder again, like gold, and then we rallied, obviously, with the nervousness of the overvalued equity markets.
You're buying on the dips for gold, but you're buying silver outright at this level, or are you?
Yeah, I'd be a buyer kind of around 18.20. I think with a 17.50 stop. So anywhere between 17.80 and 18.20 on silver, I think is good value. Hasn't, you know, it's totally underperformed gold over the last 2 weeks. Even saw overnight, gold was trading 15.20 on Friday. It's had a $50 rally, whereas silver is only gone up 30 cents.
Yeah. Okay. All right, Brian. Thanks so much indeed for dropping by. It's good to see you again. Thanks so much indeed. Have a good 2020. We'll be talking to you again, doubtless, in the months to come. That's Bryan Noble from tradernoble.com. If you want more from Brian, just join him on his website.